The Jared Dillian Show.
I'm Jared Dillian. This is the Jared Dillian Show. If you want to call to talk about your money, please call 844-305-7800. That's 844-305-7800. This is the Jared Dillian Show. So, as we found out, having zero commissions on stock trades is a really bad idea. If there's one lesson that can be learned from this whole GameStop mess, it's that having zero commissions on trades is a really bad idea. Not kidding about that. The whole thing with GameStop wouldn't have happened if commissions were $8. Not a chance. Not a chance. You know, if you're buying a share of GameStop at $20 and you're going to pay an $8 commission, like it doesn't work. It doesn't make any sense. You're going to pay a 40% commission, you know, and you got people buying fractional shares and all this stuff. Like people don't buy it's insane. It's I really can't even put it into words, you know. And we talked about this on the show a bunch last year. When this happened, see, first, Robinhood came on the scene a couple years ago. They had zero commissions, and they started getting a lot of accounts, and that forced the other brokerage firms to go to zero commissions. It was all competitive pressures. There's no conspiracy here. It was all competitive pressures. And when this happened, I said bad things are going to happen. I said that bad things are going to happen, and bad things happen. Now, what I was talking about at this time was people's propensity to overconsume free goods. If something is free, people tend to overconsume it, especially in America. Like the United States, people have no ability to ration anything. No ability to ration. I mean, we see this with healthcare. I have an old story just popped into my head. I had an eye infection. By the way, it wasn't just an eye infection. I had eye herpes. There is such a thing. You can get herpes in your eye. No, you can't get it like that. It's transmitted other ways than that. But I had this eye infection, and I went to the ophthalmologist's office. And it was like 9 o'clock in the morning on a weekday, and there was like 40 people in there. It was all old people. They're playing checkers, they're playing chess, they're socializing. Like the ophthalmologist's office was a place to hang out, and it's all Medicare, and they get all this stuff for free, so they overconsume it. We overconsume free goods. If there's like a banquet at work, and they put out the spread of food, what happens? Afterwards, everybody goes up with like bags and shovels all the food into bags and they take it home because it's free. If it's free, you want to get as much of it as you possibly can. That's what we do with things that are free. We're going to talk about free things more later in the show. If something is free, people want infinite amounts of it. So you make commission zero and you get infinite amounts of trading. What did you think was going to happen? And this isn't good. We don't want people to do infinite trading. We want people to buy and hold their investments for years. We don't want people trading up a storm. It's not desirable. It's not what we want. Now, I didn't predict that free commissions would result in an almost bankrupt video game retailer being manipulated to the moon. I did not predict that was going to happen. But that is a direct consequence of zero commissions. And I've said before that I used to be with a discount broker. Like I used to trade stocks with a discount broker, and I pulled the assets and I intentionally gave them to a full service broker, partly because I was getting full service and that was a good thing, but also was so that I would pay higher commissions. I wanted to pay higher commissions, because the higher commissions would prevent me from overtrading. And it has. It's improved my trading dramatically. By the way, another thing that I do all my trades over the phone. I don't use the internet for trading. I do them over the phone. And I do this for a reason, because there is accountability. Okay? There's somebody on the other end of the phone hears me put in the trade, and then a year later they hear me take off the trade. So if the trade is a loser, I know it is a loser, and the broker knows it is a loser. And what that means is that there is accountability. Someone else knows that I screwed up, that I made a mistake. On an online trading platform, you can lose money anonymously. Nobody has to know. You can go around and tell people about all the money that you're making, and you could be losing money on the online trading platform. You don't have to share with anyone that you lost money. Nobody knows except for you. So I'm a big fan of having my trades public, and this is very important. I have a financial newsletter. I announce all my trades in the newsletter. Okay, so if there is a loser, thousands of other people know that the trade is a loser. And nobody likes to lose money, but nobody likes to be embarrassed either. And most people will seek to avoid embarrassment more than they seek to avoid losing money. Most people would rather lose money than be embarrassed, right? And being embarrassed is being accountable. So we've talked before about how fees are not the enemy of investors. In fact, the people I know who have done the best are people who paid high fees and commissions. They paid high fees and commissions, and they bought and held stocks forever. The people on Robinhood are not the ones doing well. Most of them are chopping themselves to bits. Now, you do have these people that they're taking screenshots of their account balances, and they're like $5 billion and $10 million. Yes, there are some people that have been manipulating the hell out of stocks and making money. That's not normal. Most of these people are losing money away. By the way, GameStop today was down to $90. $90. So it's not a long-term plan. And those people will lose that money eventually. Remember the movie Ocean's 13? So the plot was Al Pacino played Willie Bank, had this casino, and George Clooney and his gang were doing a revenge job to get back at Al Pacino. And the plan was to rig all the games in the casino, have people win lots of money. But they had to get them to leave the casino with the money. Most people don't do that. If they make money in a casino, they pour it right back in, and they end up losing it. That's Vegas, and that's Wall Street. If you play a negative expectation game long enough, you are going to end up with nothing. So the goal is to turn the negative expectation game into a positive expectation game. And you do that by buying and holding. That's how you beat Wall Street, by buying and holding. Is that clear? That is how you beat Wall Street. You buy a mutual fund, you hold it for 20 years. You buy an index fund, you hold it for 10 years. That's how you beat Wall Street. And all of this day trading is very concerning to me. It's a very worrying sign. And it makes me think that we are in a bubble, that we are at the top of the market. And it really feels, from a sentiment standpoint, it really feels like we are at the top of the market. And I could show you some charts of sentiment that would blow your head off. We are at the highest levels of sentiment in my career. Okay. I saw this 20 years ago in the dot-com bubble. Everyone was day trading. Now, they weren't doing stuff like they were with GameStop. They weren't blowing up stocks with a huge short interest, but they were day trading. Retail interest in the stock market always peaks at the top. Retail always piles in at the top. Retail is always the last ones in. It happens in every cycle. It is happening this time again. So, in the life cycle of an investment, in the very early part, first the very smart guys come in, and then the smart guys, and then the momentum guys, and then the growth guys, and then retail at the top. And then on the way down, the value guys will take a shot, then the deep value guys, then the distressed guys, then the gamblers. It's called the life cycle of an investment. I came up with this many, many years ago when I was back at Lehman Brothers. But you can hold an investment across the entire cycle because you're a buy and hold guy. That's how you beat Wall Street, buying and holding. I actually recommend, if you're shopping for mutual funds, you get some very expensive mutual funds with loads and sales charges where it costs you 3% to get in. And that is because you will be holding that fund forever and you will be compounding those returns forever. And if you have lots of money, I recommend that you go with a full service broker and pay high fees and commissions, which will discourage you from trading and encourage long holding periods. If you want to call to talk about transactions costs, I'm Jared Dillian. This is The Jared Dillian Show. Please call 844-305-7800. That's 844-305-7800. Tell me what you think about zero commissions. If you're worried about what's going on here, then maybe it's time to lighten up on risk. If you have 80% stocks, you have too many stocks. That is true now, but that is always true. If you have 60% stocks, you have too many stocks. I will tell you something that is hard. Being in all cash and watching the market go higher. But you don't have to be in all cash. You can be in the awesome portfolio and still be fully invested. You can have stocks, bonds, gold, cash, and real estate, and you are fully invested for the long term. Let's run through the numbers again. 8.4% over the last 50 years, while having half the risk of an 80-20 portfolio with a 9% max drawdown. Remember the financial Hippocratic oath. First, do no harm. That means don't lose money. I'm Jared Dillian. This is The Jared Dillian Show.
The Jared Dillian Show.